positives to take thus far?
Sure. So one thing I would say about CRM is that it's been a massive underperformer relative to software overall and relative to the market. It's trading at 6 times sales, which has been a floor for the stock over the last 6 or 7 years. So I would focus, in terms of the takeaways, I'd probably focus less on the stock price reaction and more on what they're actually saying for guidance, just because the stock price has been discounting a fair amount of negativity.
No doubt about that. You handled that well, by the way. You actually looked at this. You looked at the particulars on this before you showed up today. You knew it was coming. All right, let's expand it now. Eugene Profit, he's the chairman, CEO, and CIO of Profit Investments. Erin Brown's here, too. She has the current playbook from PIMCO for the markets. Eugene, I'll go to you first. Just a reaction to Salesforce, because I know you're keeping your eye on it.
Yeah, I mean, good news that they beat on the top and bottom lines. I really wanted to dig into that guidance to see it. Maybe foreign exchange, the dollar firming up, that could impact their revenue, somewhat. I think that it says IT spending is basically stable. I don't think you're going to get a big jump in the stock here now. I mean, you're at about 35, 36 times forward earnings with it growing at about 16%, so a peg of 2. I'd like to see that peg get down to 1.75. The good news is I don't think the stock is going to go down much, but I don't think it's going to run much higher either, because in this environment, it's just a busted growth stock. I like it. The valuation is good compared to last year, but I think that we need a little bit more macroeconomic stability for it to really take off again.
Erin Brown, all things considered, earnings haven't really been that bad at all.
No, earnings.
I mean, you've had your cases where companies have been impacted by different things that are going on, but even the ones from, let's say, a comparable tech space, if you want to call NVIDIA and Cisco, just because they're technology companies, yes, they talk about Ukraine, and yes, they talk about the China lockdowns hurting, but that, stories were pretty good.
Yeah, earnings across the board were fairly good as reported, but what was key was that guidance, pretty much across every industry sector was pretty mixed on the outlook, and we saw pretty significant downgrades to certain sectors in respect to the, sort of mixed outlook. I think what's important, as Eric mentioned earlier, is that when you look at guidance, it's continued to be revised up year to date for the S&P 500 stocks. And so the market hasn't really digested the fact that harder and tougher margins are ahead. And that's going to, I think, start to bite as we move into the second and third quarters. What's important is you started to see a slowdown, as mentioned by management companies, into the latter part of the first quarter, and that continued early into the second quarter. And so I think that's what's going to be the key to watch, is how margins get affected and how trends are going into the latter part of this year, which I don't think earnings estimates are discounting yet, albeit certain sectors of the market from a stock price perspective certainly have taken a hit. I mean, NASDAQ down 25% year to date. Some of those stocks are already pricing in a recession, even though that a slowdown is probably likely, not exactly a recession. So from here, I think it's very much a renter's market, not a buyer's market.